Hello everyone, it's Davide here. Welcome back to Learning Finance. In today's video, guys, I'm going to give you an update on Google stock. Okay, so Alphabet, ticker symbol GOOG or GOOGL, which are basically the same as I explained to you in the previous video. The difference is that one gives you voting rights and the other doesn't. Okay, but in terms of prices, we can consider them as equal. I'm gonna give you also my price target for Google stock in 2024. The only thing I ask you is to leave me a like if you find this video interesting. An early like is very important for the video itself, and subscribe to the channel. Let's begin. So to understand the business division of Google, we have the 82.8% of their revenues is from advertising. So a very huge part of the business comes from that. Others, 10.7%, which is basically the parts of services, like for example, the Android apps, all these kind of things goes in others. The cloud business, so 6.2%, which is increasing, and that's positive for Google. We know that the cloud business is going to be very important over the next 10 years, and they are invested in it. And other bets, because Google likes to invest in new high-risk businesses, so like startups and things like that. This is a very slim slice in the cake. 0.3%. Anyway, sometimes from here it comes a very big and interesting business because a lot of them are going to fail, but some of them will eventually be successful. When it comes to the revenues of Google from 2005 to 2021, so the other 2 years are expectations, we see the parabolic movement in revenues growth. Okay, this is wonderful for a company like Google to invest, especially if you did it in the past 10 years. Anyway, 2020 they are expecting at $171.66 billion in revenues, while for 2021 $206.9 billion. Now revenues went up so high, so fast during the last 15 years. They will continue to grow, alright, but we cannot just imagine and expect that this parabolic movement will last forever. The company is becoming very big, and obviously the growth rate will decrease eventually. And this is something important to understand when we invest in these companies. Anyway, the growth is still there. Over the past 5 years, the revenues and net income, here we have 2015, 16, 17, 18, and 19. We can see that in 2017 we had a drop in net income, even though the revenues continued to grow on a regular basis. This is because of an accounting problem and taxes. Anyway, overall, the net margins is around 20.5%, 21%. As we can see from here, the historical margin has always been above 20, and sometimes it went down. Here is 2017, where I was telling you the problem before they had with taxes, but then soon came back to around 20. So if we take an average of the last 10 years, we have that we are around 22% in that margin. When we take a look at the balance sheet, we have that now the upper part is from the 10K of 2019, while this is updated to Q2 results. We can see that now from here the only thing which is important is the net margins, which it was 21.22% in 2019, with the total revenues of $161.8 billion. While for the balance sheet part, we have $149 billion in current assets, $43.6 billion in current liabilities, giving us a current ratio of 3.4, which is absolutely magnificent. It means that Google can survive for 3.5 years without revenues, okay, with zero income. They could survive and not go bankrupt. Absolutely astonishing for a company like that. Total assets, $278.5 billion. total liabilities 71.1, giving us a stockholders' equity of 207.3 billions. Again, the ratio this time is 3.9, so even better. Very great and solid business. Debt to equity ratio 7.79%. Anyway, the cash and cash equivalents $121 billion in their balance sheet. So with a total debt of $16.1 billion, it means that Google could pay their debt whenever they want for multiple times. Just to give you a quick idea, this is the cash and cash equivalents in Google's balance sheet, and this is the total debt. So they can pay this red square like up to 5 times whenever they want. And this is what makes Google a very solid business, which if you invest in it over the long run, you can sleep at night without any problems. Now let's try to do a fundamental valuation of the company. As always, I took the last 5 years and trying to predict the next 5 years up until 2024. The first 2 years, these are analysts' expectations, so 171.6 billion in revenues and 206.8 in 2021. From 2022 to 2024, the scenario analysis from 13% to 20% growth. Now, historically, the growth rate in revenues has been higher. Anyway, the company is becoming bigger and bigger, so we have to imagine that it will not continue to grow at this incredible rate, okay, consistently. Plus, this year, the pandemic, we are expecting a lower growth, which on average equal to a lower growth rate over the next 5 years. As a net margin, I took 21%. And let's start with the 13% scenario. Rate of return 9%, perpetual growth rate 2.8%. And we have that the today's company valuation will be around $984.4 billion. Divided by the total amount of shares outstanding, we have a fair price today of Google at a 13% scenario at $1,432 per share. With a 15% scenario, $1,500. So, and today's company valuation of around $1 trillion. 17% scenario, we have 1 trillion point 07 divided by the total amount of shares, the fair price for Google, $1,570 per share. And the last scenario, the more extreme one, the 20% scenario, so positive, very positive scenario, same requirements, the fair price today, $1,681 per share. Now we take an average of those 4 cases, and we get an average fair price of $1,546 for Google. But we have to adjust and keep in mind that the debt minus cash and cash equivalents equal to $104.9 billion in Google that we have to add to the existing market cap, because we cannot forget about it. These are assets. This is why it is negative, because usually this part you deduct from the market cap, but in this case we have to add. And once we do it and we do the adjusted fair price, we have a fair price of Google of around $1,700 today. So obviously, considering that Google now is trading at around 1,450, it makes still a cheap stock for the long run, in my personal opinion. So very solid business and a cheap price. Now, if we try to give a price target for 2024, this is what I did. I took the 17% scenario as an assumption. So that gives us revenues in 2024 of 331 billions. With a net margin, I consider 20.5%. and a PE ratio of 27, which historically is around the average PE ratio for Google over the last 8 years, 27. And that gives us a price target in 2024 of around $2,700 per share for Google. So I won't be surprised to see this price in the next few years. Now, as I told you before, the company is solid. The price is still cheap for Google. The thing is, now, first of all, we have to see how this downtrend will end up. It could go even lower. Honestly, it would be even more a bargain. Now, the thing is, Google is probably the less famous stock between the tech stocks. Okay, so usually media, they don't talk about Google. And another fact is that if I were them, I will do a stock split because it would be more interesting for investors to buy Google at a lower price. I mean, with $1,500, you can just buy one stock. And for example, in Europe, you don't have the possibility most of the times to buy fractional shares. So this is for retail investors, probably they prefer to buy other stuff which is more overvalued, but they don't care because the price is lower, physically lower. They can buy more shares of the company, like for example, Apple or other stuff. Anyway, in my opinion, this remains a very interesting business to hold for the next 10 years. Obviously, I don't expect crazy movements for this stock because they don't have debt. So basically, they are very stable and they are not so famous, like, for example, Tesla. So the stock market goes crazy because this is a solid business. This is a stock to put in the part of your portfolio when you just put money in it and you wait and you are quite sure that you're gonna make more money in the next 5 to 10 years. This is not a risky, high risk, high reward stock. It is something that when you have money, just put something into it and wait. So this is my opinion. Tell me down in the comment what's your opinion and leave me a like if you find this video interesting and subscribe to the channel, guys. As always, have a wonderful day.